most economies are better positioned this time around compared to 2013 during the taper tantrum because current account positions are stronger. Where they're in deficit, they're smaller deficits, and in many cases, they're actually in surplus. And also, there are substantial foreign exchange buffers built up. And the Fed is really doing a good job of telegraphing its moves, probably learned a lot of lessons from 2013. In terms of which economies to watch, it's the usual suspects, really. We're looking at the emerging markets, economies like Indonesia that tend to get hit by bouts of risk aversion, as well as some of our lower rated frontier markets that depend very heavily on external financing, like Sri Lanka and Laos and Maldives, for example.
Yeah, this brings me to my next point, and you kind of just answered it there. Is the Fed really doing enough to telegraph what it is doing so that investors are not caught unawares this time around vis-a-vis 2013?
Well, I'll leave that really for market people to assess, but clearly the Fed is looking way ahead. And I think the messages from this past week are evidence of that. The big debate, of course, in the market is whether inflation is temporary or transitory and whether the Fed might have to react sooner. Our own house view on that is that the inflation spike we're seeing in the U.S. is indeed a temporary phenomenon. And we think as supply chains normalize and as consumption moves more into services away from the big boom we've seen in durable goods, we'll see inflation come off later this year and certainly into 2022. That's our house view.
Why did the Fed then upgrade its inflation outlook if the increase in prices that we're seeing is only transitory?
Well, you can see it in two ways. Is the Fed telegraphing earlier tightening because it's worried about inflation, or is it rather more comfortable about the growth outlook? And I guess our take would be that the Fed has become increasingly more confident that the big fiscal stimulus is doing the job to improve prospects in the labor market and carry the recovery this year and into next. So, our take would be that they probably think that the rationale for accommodation beyond 2023 is now less than it was.